Really excited for this. The next 25 minutes. We'll be starting off by giving a short introduction about myself, give a high-level overview about Unit and the token economy, which is something that in projects that we're doing here in Bali. The first one is the Unit Village, and the Unit Village is focused on building what we believe to be one of the first real estate projects in the world which use tokens. The Unit Club, which is a membership club that is focused on the token economy and the blockchain ecosystem in Bali, which we hope to roll out beyond Bali. And the third one is the Cenggu Shortcut, to serve tokens for public infrastructure. So looking forward to a quick run through. If you have any thoughts, feedback, questions, please feel free to write in the chat. Joe, do you have a question before I see your hand this up? No? Okay, cool. So in terms of my background, so I've been building different technology companies for the past 13 years. I'm a software engineer as my background, half Singaporean, half British. Been very interested in decentralized and peer-to-peer technologies since 2009, 2010. I built a decentralized video conferencing app, which had a few million users. I was very excited about the idea that you can have a call or communicate with someone without using a central server. I was fascinated by that, and built something actually very similar to Zoom in 2009, 2010, 2011. We grew to a few million users, sold it in 2014. One project alongside that was the Wikileaks project, which I was involved in. I was very excited about how we could provide a more transparent world. A lot of what Sim talks about is how governments aren't as transparent, or organizations don't give off a perception of what they're doing, which it might be different from what they're trying to do internally. So the cool thing about Wikileaks was it really demonstrated a way to showcase what governments were really doing. And I was lucky to build the Android app and then start using Bitcoin then. After that, worked at one of the top venture funds in Europe, and more recently been co-founding Unit with a number of the people here on the call. And Unit is focused on this concept called the token economy. And the token economy is something that really excites me. It's we believe it's not just going to change the cryptocurrency industry, but change the world as a whole. And it's got a few different premises. One is that the way ownership works at the moment is it's held by the people who start companies, the founders, and the people who invest in those founders. So if you think of something like Uber, it started by Travis and Garrett, two amazing entrepreneurs, and some people gave the money, the investors. Then the drivers and the customers, they don't get any ownership. So the way the world works is you have founders and investors, and you've got customers and employees. Like, we're using this amazing technology, Zoom. It's a multi-billion-dollar company, but people who use it, people who organize things on it, the customers, the employees who build it, they don't receive any of the huge amount of value that's created. And that's how most of the world works at the moment. It's largely wealth is concentrated amongst the people who start things, the founders, and the people who invest in them. And the cool thing about the token economy is it represents a future where everything is cooperatively owned. The idea that your favorite restaurant, your favorite spa, your favorite gym, your favorite musician, everything is cooperatively owned and shared in its value. So that's one premise of the token economy. Another one is something which Unit is pioneering, which is the idea of a treasury. So at the moment, cryptocurrencies, digital assets, among some groups don't have the best reputations. I talk to my friends who are, traditional technology investors or private equity investors, and they look at cryptocurrencies and they don't understand it. They kind of struggle to think, like, what are they actually buying? Where is the profit generated? What are the assets? And it's very hard to see how to, if people recommend a coin, how do you know whether something is good? And we basically introduced this technology and model of valuing tokens called the treasury, where, when a token or a coin does well, it puts some of this value into the treasury. I can do a quick walkthrough later, and depending on how much funds are in the treasury, it allows you to look at different projects. So I'm going to be talking about 3 different projects, and please feel free to ask any questions or feedbacks or thoughts. The first one is the village that we're building. So I'm going to share my screen and show you. So this is a 10 residence development that we're doing here in Bali. So you can see this is a high level overview. Here you can see the different units. There's a clubhouse here in the middle with a pool, a sauna, a ice bath, the different layouts of the units. Each of them are like in between a studio and a 1-bedroom. And we believe this to be the first token-driven real estate project in the world. And what does that really mean? So in the case of how real estate projects typically work and function, it's a developer who either buys some land or rents some land, and then either gets a loan from a bank or gets financing from a bank, or pre-sales units, uses that money to build the space. And if the real estate project generates a lot of value, all of that goes to the developer. None of it gets shared amongst the community. And what we're showcasing here is we're showing how one of the biggest industries in the world, real estate, can be applied towards using tokens. And very concretely, how are we doing this? So we basically issued 1.6 million village tokens. We sell these village tokens for $1.6 million US. $400,000 of that is going into the land. So it pays for the 20-year leasehold for the land, and $750,000 is used to build the project and development. So 400K for the land, 750K for the development. It leaves about $450,000 left. So we spent 750 plus 400, and we've built the space. Afterwards, we're selling 5 of the money from the pre-selling of the units goes back into the treasury. And what this does, it basically allows all of the residences, the people who rent and live within the unit village and the community to get some of the upside. So in terms of timeline, we're breaking ground in the coming weeks, and we plan to be up and running in Q1 next year. So I'm looking forward in the next World Bali Forum to be sharing progress there. In terms of the second thing that I'm excited to speak about, it's the unit club. So I'm just pulling up some pictures now here that our partner and architect Sam has shared. And the concept here is we're trying to build what the next generation of clubs, co-working spaces, and an office space looks like. It has office space, has facilities like a sauna, a steam room, a plunge pool, a hot tub. It has a social room, and we're doing the first of these in Bali, and we intend on growing and scaling this concept to various cities around the world. And the rationale behind this is, we were very inspired by how models like Soho House and membership clubs work, and we're seeing how we can sort of improve and emulate this sort of community experience. And the third thing I'm excited to speak about is the Shortcut project. So, we 4 or 5 months ago had this idea that, hey, we'll love to show how tokens can be applied towards fixing a piece of public infrastructure. So, that's an idea. We have a problem. It's a really bad piece of infrastructure or road here in Bali. And basically, this is an example of a token which might not have a business model. It doesn't generate profit, it doesn't have revenue, it doesn't have dividends, but it has a lot of value. And we wanted to show, like, how can we support the different people who contribute to financing and supporting an initiative like the Shortcut project. So, we've raised about 35,000 US at the moment. We have about $25,000 that we're needing to raise in total. In addition, so it's about 7,000 in total. reward is about 800 meters. And what typically happens in a crowdfunding project or in a GoFundMe is you donate money in, you feel good, it's a tax write-off, and that's kind of it. And we're kind of excited to show that someone who puts in the first $100 before anyone else has put money in, before anyone else has been marketed to or heard about it, is able to potentially get a return, or get some upside from that philanthropic donation. Then when the philanthropic socially impactful initiative succeeds, people are willing to pay more for in the future because they're happy and they receive the benefits of the project. They can use these profits to buy into other projects. So these are three separate projects that we're building here in Bali. Does anyone have any questions or thoughts so far? I'm going to pull up also the drawings for the club space that we're building. So this is the unit village. So the residences around represent the village token, which is the unit village. And then here in the middle represents the clubhouse. So you can see here it's 2 floors. We have the sauna and the steam upstairs, and we have the co-working space downstairs. Please, Kat, you have a question.
Thank you so much, Michael. Such a great talk. And I have I would say, a very simple question that many of our audience will ask. What are the main benefits of tokenizing real estate? Thanks.
Yep, great question, Kat. So I guess there's 3 primary reasons why one would tokenize real estate. One is that it's an extremely illiquid asset. So most of the time when you own a property, the only way you can get financing for it is to sell the whole thing. That's one option, to get a mortgage against it. So you go to the bank, you give over your property, you get cash, and the third way is, I guess, you rent it out. So there's 3 ways you can get capital for it. And tokens are in effect a combination of all of these 3 ways. You can think of what newspapers are to reading on news on the internet, or email compared to paper letters. It's what banks are to tokenization. So if you have a studio or 1-bedroom house and you created a token for it, you could sell parts of your house in exchange for some capital. And then if you sold your entire house, or you bought back the tokens that people had bought from you, it basically allows you to access capital in a way that is very foreign to a lot of people. And then another key one is community ownership. So, at the moment, most of the value is held by, 1 person, 5 people. If you think about, many of the prime real estate property in the world is held by, a very small amount of people, but it represents, hundreds of billions or trillions of tens of trillions of dollars of value. So the cool thing about a token is it allows you to break up, a very valuable property into lots of different chunks. So say, Central London, there's some properties worth, $50 million. If you created 50 million tokens, then you're able to, use that capital for different things. And when someone is to buy the entire property, then all of the 50 million token holders, the holders of these 50 million tokens are able to receive some.
Awesome. Thank you so much, Michael. And following up question. Do you think it's possible to tie land and real estate to digital assets tokens? Thanks. And how will it look like from the legal perspective? Thanks.
Great question, Kat. So I think it's something which is very difficult to do, in the sense that it's almost impossible. It's kind of similar to when you think about somewhere like Asia, outside of Singapore and Hong Kong, you can't tie a real world thing to a company. At least in somewhere like Singapore and Hong Kong, there's a legal structure. Most other places in Asia, whether it's Vietnam, Thailand, Indonesia, Philippines, Cambodia, you might have a beautiful hotel, and there might be a company which supposedly represents that hotel. But if you buy into that company, there is no guarantee of the relationship between the company and that really nice hotel, or a company and a company and a business. It's very hard to link the two. And another thing is banks in a lot of these countries aren't as stable as maybe more developed countries. So the way in which we've looked at tokens and the token economy is it's very similar to the Wild West of Asia, and you have to assume that when someone's making a token, there is a very high chance there's a very high chance that the person could be a scammer. They could run away with your money. If they do fail, you need to know your downside risk. So the treasury is a way of establishing that downside risk. So in real time, you can look at exactly how much funds the project has. You can see in the worst case scenario that the business, the project, the organization shuts down. What is the lowest price of these like tokens or shares, these pieces of value? So it's I guess to answer your question, Kat, we believe it's not possible to tie a real world asset to a digital token in a trustless way. So what you have to do is you have to make the real world asset generate value, and you put that value into a treasury which is tied to the token. And if lots of value is generated from the asset, from the business, from the organization into the treasury, then you're starting to see a relationship develop. So it's in the interest of the business to continue supplying the treasury because it's done so for a very long time, and a lot of the token's value is dependent on that relationship. A great question here from Ginger Low. I'm still grasping to get this idea clear in my head. So how are tokens different from shares? So tokens are actually really similar to shares. So it's kind of like, okay, someone introduces you to the idea of Netflix versus watching TV, or someone introduces you to the idea of sending an email versus writing a letter. They're both fundamentally the same thing. When you write a letter versus you writing an email, you're communicating in a long format, long form format. When you watch, Netflix or online content, it's the same as having a remote control and watching content on TV in between ads. So we view tokens as no different from shares. And when people say that tokens are cryptocurrencies, they're very different from securities or shares, we think it's a little bit diluted in the sense that if things shouldn't be people shouldn't be scared to be securities. People shouldn't try to avoid being a security because a security is really something which has value. If it's not a security, it effectively has close to zero value. Like currencies serve the purpose of transacting, of being a way you can exchange value. But the moment that digital assets have this liquidity, you can start using a piece of your home to buy a meal at a restaurant. Behind the scenes, your house is being sold on an exchange in the digital token market, and that is being used to buy some food. Then the need for currency sort of disappear. So what we're going to see in the very near future is all of us here in Bali or wherever anyone is in the world, we're going to have a portfolio of like tens of different tokens, hundreds of different tokens. And it could represent people, could represent businesses, different ideas, the future of the token economy, which many of us here actually on the call. So my co-founders, Kat, Joe, Adrian, and Pravin, and a few of us here are pioneering. So if there's any way we can help or support some of the projects that you guys are working on or get behind, please feel free to reach out. Christian also. Yeah.
Thank you so much, Michael. And I'd like to welcome everyone to post their questions to the main chat for Michael to answer. And I have a question. Are there any other projects except of Unit Village that are playing with the real estate tokenization here in Bali and tokenizing the real assets here locally? And what is your vision on that? Thank you.
Yeah, great question, Kat. So I don't think we've come across any project, locally in Bali or around the world, which is doing anything remotely similar to, what we're building with the Unit Village. We think that what we've studied so far in terms of real estate tokenization has largely been, very much driven by hype or, people wanting to jump in on the bandwagon of cryptocurrencies and digital assets. They haven't really been focused on the core of it. So I'll give an example. Early about 7 years ago, when prior to Ethereum coming out, people were very excited about the blockchain. They said, hey, let's put shares on the blockchain. And then what they found that it was very difficult regulatory wise, because governments didn't want shares flowing around, moving around. They lawyers, pieces of paper which documented it, lots of fees that were being made, which wasn't supposed to be disrupted. And then in 2017 you had ICOs, and the issue of ICOs is the issue of ICOs is they weren't a lot of them never materialized, raised hundreds of millions of dollars, but they never worked out in terms of having a business model or any way of measuring value, nothing backing it up, a business model. And then people said STO, securitized token offerings, which was back to what was happening in 2013 and 14. We think that the future is a combination of the two, where you've got the value of a security, but you have the fluidity of a token. So that's what we believe that we're doing within Unit and the token economy. So excited to see how we can showcase the future this way. Good question here from Jerome. Is the Chengdu shortcut tokenized? Can't see how different from a classical crowdfunding campaign. So you're totally right. It is very similar. Several key differences. So one key difference is that typically on a crowdfunding campaign, you put in your credit card, and the most you put on your credit card online, typically for a crowdfunding campaign, is $10, $15, $20. People don't donate $500 or much more. But the thing about the cryptocurrency and digital asset space is you've got tens of thousands of hundreds of thousands, millions of dollars flowing around much more freely. So if you launch a crowdfunding campaign on Indiegogo or Kickstarter, you might raise $10,000, $15,000, and in the digital asset space you're raising 10, 15, $20 million. And there's a much it's a much more competitive market for crowdfunding. Another thing which is similar is another thing which is cool about tokens is it basically rewards the people who are buying into a campaign. So if for instance, I brought into the Oculus crowd sale, I bought into a foldable bike. I put in, I think $5,000 or $10,000. Never got my foldable bike. It would have been cool if I could sell my crowdfunding pledge, to someone else who believed in the project after 2-3 years. The bike's not showing up. Or like when Oculus was bought by Facebook, it would have been nice if I got some of that upside. So I guess these are some similarities. Good point here from Elias. So two projects which are working on tying real estate to tokens. I mean, I know one of them. The issue with these is we feel that they're just trying to jump in on the bandwagon. It's like a lot of these projects were launched in the past year. They're kind of like, crypto's hot, I can raise a bunch of money from it, let's do it. And they lack the ability to tie the real world asset to the digital token. So if you come across any projects which do it in a trust-free way, I'll love to study it. But from what I've looked in the space, for the past 10 years, I think apart from what we're doing, I haven't seen anyone attempting to do it in a way which is.
Thank you so much, Michael. And I have a follow-up question. For example, if I'm owning a villa currently and I would like to issue a token for my own personal project, what are the steps? What's the process of launching the token for my project? And what kind of advices and tips would you give to our audience? Thank you.
Great point, Kat. So I guess this ties in with the point of how to raise money or how to run a successful project, how to pitch what you're working on. So I think there's a few different things which are important. The first one is a good team. So when you communicate what you're working on, you want to show that this team is able to execute on what they're doing. It's not their first time doing it. They know a lot about the industry, and yeah, they're the best in the world. They're not going to jump onto another project the moment it gets difficult. They're in it for the long haul. And super effective A players. The second one is having a really good product, having a good business model, a business plan, something you'll use and tell other people, something that scales. So it's not just working for 5, but working for 500 or 5,000 people, 5 million people. Third one is a compelling vision. So if it's another boring restaurant or cafe, You know, it's not super exciting. If the market's small, it's not super exciting. It needs to have a big market. It needs to be, you know, interesting, inspiring, got a strong roadmap. And number 4 is, you know, has access to capital. So, you know, people don't want to invest in projects where, you know, the team and the founders, you know, struggle to raise money. They want to invest in people who have good networks, so that, you know, there's a reduced chance of the company going bankrupt or running out of capital. 5th one is FOMO. So the fund I was working at in London, the head of the fund has a story of how he had a business trip to San Francisco, and someone said, "Hey, can I pitch you?" And my friend said he was too busy, and the entrepreneur said, "Okay, I see your schedule. You're going to be driving for half an hour. Can I pitch you on the bus?" And he was pitching for half an hour. My friend said, "No, I'm not interested. The taxi business is too competitive, it's too regulated," and he ended up starting Uber. So, you know, there's this emotional fear of missing out. So if you can show that, you know, your project has the chance to be that one deal that, you know, you always regret not investing in, then that's a good piece. And then the 6th one is an exit opportunity. So when you buy into a project, you know, be clear on, you know, what is the way to exit or get out of the investment. So yeah, those are a few points, not just, I guess, for tokens, but for the all sorts of businesses and projects.
Amazing. Thank you so much, Michael. And
cool. I think
just
we're wrapped on the hour.
Yeah. Just to add to this, I guess like on the Unit platform, it's super easy to launch a token on the Unit network. That it's only required to have a few things, very simple things, as the image, as the total supply, and ticker. And then that's how you can actually create a token for your own villa and do the fundraising through your community, and that is secured on the blockchain. And yeah, I'd like to thank you so much. I'd like to thank you, Michael, for joining here and sharing such an amazing project that we're working on Unit. Great talk, Michael. And please feel free to share more links about the projects and tokenization and real estate in the chat.